Hey, good morning, everyone. Welcome back. This is Saturday, and it is Multifamily Unplugged. Hope you had a great week and you are enjoying your weekend or finishing up your work week or whatever you're doing today. I hope it is going well for you. Hey, if you're new to the show, thanks for being here. Appreciate it. Thank the person that invited you. I know that this a lot of times these podcasts get shared by referral, right? And I think referral is a really important thing for us to keep in mind and think about. One of the things I work with my coaching clients with a lot is asking for referrals. One of the big things in multifamily and multifamily syndication is that we need to be raising capital, right? We're all a function of capital. And if we don't raise capital, we're not buying the next deal that we want to buy. So it's really important that we're talking to our current investors, continuing to stay in touch with them, being very transparent about where you're at in your current deals, asking if they want to be investing in your next deal or who they know who would be interested in passive investing and investing in your next deal. So I think referrals are really important. So keep referring people to the Saturday morning Multifamily Unplugged show. Refer people to our social media, our Instagram and YouTube channel. We're always putting out great content, some information with great guests, great clips for you to learn and grow with. I'm super excited about this morning. Again, you're going to want to buckle up. I have George Roberts on. George is from Detroit, from the Detroit, Michigan area. His company is Roberts Capital. And you know what? I'm really excited about the conversation this morning. George is an author, multifamily investor, does a lot of small multifamily, and we're going to get into that this morning. And George wrote a book called Passive Living Through Passive Investing. And, if you're a passive investor this morning and you're hanging around trying to figure how to get started, maybe you'll get a couple nuggets this morning. So if you're driving, pull over, take some notes. If you're sitting at your desk this morning, grab a notepad, your coffee, and let's get this show going this morning. George, good morning to you.
Well, good morning, Mike. It's a pleasure to be on your podcast. Thank you.
Yeah, I appreciate you being here. I know that we've tried to get this together a couple of times, and technology and issues and life, and so I'm glad you finally made it.
Yeah.
Hey, I always ask one question to my guests, and I say, my next book is going to be the one word, right? And I always ask, my guests in one word, what best describes you personally and professionally?
I would say enthusiasm. That's the only way that you overcome the difficulties that life throws in your way. And it's the only way you grow, I think. So you got to be very tenacious with everything you do. And I think enthusiasm really helps me in everything I do.
You think you've always been enthusiastic?
No, definitely something I learned over time. I was more of a shy and withdrawn kid, but over time I learned that people are just very rewarding. And if you take an interest in people, you'll find that they're very interesting.
Yeah. Well, listen, I'm going to use that word real quick here on my next question, and I'm going to get a little bit ahead of myself. But what are you enthusiastic about right now with the real estate market and where we're at?
Well, sure, a lot of things. I think we're at a point where a lot of people have washed out of the market. They may be frustrated. People who invested in syndications in 2022 and 2023 may be unhappy. But if you leave when times are tough, that's when everybody leaves. But it's when the best opportunities come along. And I think now in 2026, we're seeing slightly better interest rates, better rates to come. And we're still in the midst of a housing crisis. We're way underbuilt. And I think as soon as those interest rates do come down, any deal that makes sense now in 6 or 12 months, if you're able to refinance at better rates, it's only going to get better still.
So, you made an interesting comment, and I always love when people, make the comment about if anything makes sense. right? If a deal makes sense. What
Yeah.
what makes a deal make sense to you today? Um, and is it the same philosophy or thought process that you might have had back in 2022? Or has it changed for you?
Right. So I think that the strategy of true investing never changes because I think that all true investing is value investing. Otherwise, you're a speculator. And number one for me in value investing is margin of safety. And it goes right back to Benjamin Graham. So, what's your margin of safety in the deal? And what I would say is maybe my criteria haven't really changed, but tightened up a little bit after we saw the interest rates jump up. A lot of people had deals that they thought, well, this makes sense because I'll be able to refinance in 6 or 12 months. That didn't happen for a lot of people. That lifeline never came. Survived till 25. I don't know what to say. What rhymes with 26? But those who made it to 26 are probably okay. In many cases, some still aren't. We still have probably foreclosures on the horizon. But again, to get back to the criteria, how do you make sure that you have a margin of safety? If you have under market rents for units of your current renovation level, that is a great way to have a margin of safety. And when you can look at an apartment building and say, for example, look, I know what unit should be going for in this market, and we're getting a decent discount. Those are the sorts of things that you really want to look for. People who are paying a fair price right now, or who have to renovate to get to where they want, have a little bit more danger.
Yeah, interesting. Yeah, I love that thought around that. Hey, let's do this. Let's back up just a little bit. Why don't you tell the listeners a little bit about yourself, who you are, what you do, how you got started in multifamily, and
Sure. So, yeah, I mean, George Roberts, PhD. I started out my career a long time in academia, did a couple of postdocs, became a data scientist, which really helped me to deepen my investing knowledge. I was in fintech, and that was just wonderful to be in the mortgage industry. Very helpful to me. And I started looking for the best ways to invest my money. I came upon multifamily at the right time. This was pre-pandemic, before prices shot up like nuts. And a lot of the same things that are true today. We had a very serious housing crisis, still do, and got involved actively and passively. Turned out to be a great opportunity.
great opportunity, you said?
Well, I'm sorry, I should perhaps say a great approach. I mean, it's something that I have really spent a lot of time investing actively and passively. Uh, I might not have gotten into it without the data science background. Again, the idea just occurred to me. Look, I got all of this analytical firepower, and if I just apply all that analysis to the investing world, just look at every asset class. Where should I be? And again, I think multifamily was a great place to be before the pandemic through 2022. I think it's another time where we are at a great place to be in multifamily.
Yeah, I firmly believe that. I've been doing this 30 years and, seen these market cycles and,
Yeah.
and I always say, listen, there's no geniuses. Now, um,
Everybody's a
someone will,
genius when you're making money.
yeah, right. When the wind's at your back, everybody's a genius.
Yes.
That's so true. But yeah, not to discredit your education, but the only thing there is market cycles, you know,
Right,
and
right. Well, that's important to see, and a lot of people don't see that. And so when you are making money and people just try to, do too many deals and they don't stop or slow down. Slow down is the word for it when deals become more scarce, and they get too arrogant too. That's the other thing. When you're in a cycle where everybody's making money, people just say, just do a deal, do your first deal, and it's crazy. It works for a while, but man, that advice hits people really hard at that end of the market cycle. So people have to remind themselves to be modest, and we have to be forever learners to get along in this business, and that is probably As you said, nothing but market cycles. That possibly one of the biggest lessons to learn.
Yeah. I have this love for data, right? And I don't know that when I was growing up or I was younger, that I had the same affinity for it. So I'm intrigued by, people in the multifamily space like yourself that, you're a data scientist, research has really kind of been your life. How does that help you in multifamily? And, where do you apply fundamentals around the research and the data to what you or what we do in the industry, right?
Right. Well, let me take a step. As you mentioned, yes, I've been in research for much of my life. And the first thing I did when I got into a research lab is I asked my boss, the professor, what is the most important characteristic of a successful researcher? And his answer just blew me away. He said, curiosity. I thought, wait, it's not a 130 IQ. I shouldn't go study some more mathematics or something. No, just be curious because it's true. What gets you through those late nights when you have to babysit your experiments all night,
Yeah.
just like children? It's that curiosity. If you're curious, then I think you'll put in the time, you'll build the skills to be great with that analysis. And if you're not, then I think what people tend to do is they just read the latest report from X and just say, hey, this is what's happening. So you have to want to get your hands dirty, and that really only happens with curiosity.
Yeah, I love that. And I think I'm a really curious person. I think I always have been. You know, I didn't go to college till much later in life, and but I've always asked questions. And I remember years ago going to a Tony Robbins event, and Tony Robbins talked about questions, and the more questions you ask, the better answers you get, right? And
Yes.
it always kind of sparked my curiosity. I've people in my life that say to me, hey Morawski, why do you ask so many questions?
Good.
And I do it because I'm curious, right? Because
Right, right, right.
I'm first of all, I'm curiously interested in you as an
Yeah.
individual, and how I might be able to help you in your life. But I'm also curious about what you see that I might not see, right? So you and I could
Yeah.
look at the same deal, the same underwriting, the same, current numbers from a seller, and you might have a different perspective than me, right?
Right.
And,
Yeah, absolutely. Yeah, the curiosity is huge, but also asking the right question.
yeah,
I've seen a lot of I hate to say geeks in my career who are just really good at building deep learning models and maybe really great at answering the wrong question. And what I found in my career again is just answering the right question is it's key, right? And probably asking a lot of questions is the best way to hit on that. What is the right question? Look at things differently. Well, one of the things where I'm looking at things differently is the housing crisis. People are looking at household formation to figure out how far behind we are. But I mean, if you even just look at the data in the simplest way, which is that we build 1.5 million units per year, and how far are we behind? And I actually have something, I call it the Roberts Capital Enterprises construction tracker. You can find it on YouTube on my channel. And I track exactly how far ahead or behind we are from each cycle. And we're way more than the 5 million units behind that people are saying, 3 to 5. We're way closer, at least to the high end of that, because we're so underbuilt and we just haven't been forming households. And we know that too. Uh, since the pandemic, the latest generation just hasn't moved out of their parents' house as quickly. And so, what I'm expecting is that as interest rates come down and as more houses are built, as it becomes more affordable, that we will continue. We have a lot of pent up demand, which I don't think is fully considered in people who are looking at the numbers at a more cursory level.
What's interesting is, there is this talk about a housing shortage.
Mhm.
But then when you look at markets like, and I'm going to just use Vegas as an example, builders have reduced their sale price on on new homes built, and um, the rumor amongst lenders in the Vegas market is that builders are going to reduce those prices again.
Yeah.
So with a shortage, you would think that these houses wouldn't be having these reductions like this. You
Right.
know, is there any thought behind that?
Yeah, well, I mean, of course, we got to look at things in terms of the cost of ownership, which is really the cost of financing. And as long as rates remain high, not at their recent highs, but still high, I mean, it's crazy for people to move out these days. It's a lot harder than it was, say, 5, 10 years ago. So certainly, I think that lower interest rates is going to make a big difference. And you mentioned Vegas. Of course, Vegas is usually hardest hit. Vegas tends to get overbuilt, overpriced a lot sooner than other markets. We've seen trouble, of course, all across our country, Idaho, etc. So certainly, I think there are going to be some areas that are experiencing price drops. But I think in general, unless these interest rates stay super high for longer than people expect, that probably we are going to see prices continue to improve.
Yeah, it's interesting. So, let's talk about this housing shortage a little bit more. Do you think that when they talk about housing shortage, they're just talking about the single family market, or are they talking about multifamily? Where's the biggest shortage lie? And let me just kind of tailspin on that a little bit for a minute. But if you're doing the research, are we've seen that there's not enough apartment living. Is there you know, is there not enough single family home living? Where's that housing shortage really lie?
Right. Well, I think a historical answer is best. Around the pandemic time, we had super low interest rates and we had unprecedented demand. People were buying vacation homes because they wanted to work from home, someplace exotic, Airbnb explosion,
Mm.
etc. And so people, the builders, they really wanted to build as quick as possible. They had the capital to do it, and so what made sense then was to go for multifamily. And for the longest time, we were only getting anywhere near the 1.5 million figure because they were starting to build the multifamily. But there's a longer delay with that. I mean, we're talking a couple of years, 24, 26 months. And so a lot of that really just ended up getting dumped on the market now. They
Yeah.
really stopped their permitting and starts on the multifamily, or I should say slowed down, never stops, a couple of years back. And so now we're seeing that a lot of that glut is starting to get absorbed. I would say that's another reason why it's good to be in multifamily now. In many, many markets, you may still be a little underwater with market rents versus last year, but it's very likely to start to change in the next 6 to 12 months. And unless we do have another wave of multifamily building, then we may be relatively more underbuilt in multifamily. Who knows? Building over the next 1, 2, 4, 5 years.
Yeah. Yeah, even in the multifamily space, even if somebody pulled a permit today, it's 24
Right.
months before they go vertical.
Right.
Um, so
But even
I
from starts, I should say, I mean, I would say at least another 12 months add on for the multifamily. Certainly takes a lot longer for these projects to get there. And I think that's why we're seeing a lot of that hitting us. And of course, we're also getting hit with seasonality right now. Recording this in April. And we're just beginning to see the effects of good weather. And it's crazy for me because I mean I have apartments in the South, and they talk about the winter. We're recording this. I'm live from Michigan here today, but I don't really feel like they have a winter. But just like us, they don't move around as much in the winter and in early springtime. So hopefully we'll finally see rents move forward for multifamily as seasonality kicks into our favor.
Yeah, that's a great topic too, right? Is rent increases. I think it's, real estate's such a localized business, right? So it's market by market. And, part of my curiosity or research that we do on our team is we research those markets before we go into them and make sure they're economically diverse, and that there's economic growth happening. Um, but markets are different. Like, I own assets in Tampa, Florida, and we're reducing rents because occupancy is, 90, or I'm sorry, in the 80s, mid 80s.
Yeah,
But then I own property in Oklahoma, in Tulsa, and occupancies are in the high 90s, and we're
right.
raising rents. So, it's so distinctly different in markets.
Yeah, absolutely. I mean, it's always hyper local. I started out in Orlando, always wanted to move into Tampa, never could make the numbers quite work in time. And then things really collapsed. And so I'm happy I didn't move into that market. But I always tend to like the calmer markets. I'm from the Midwest. Having opportunity to invest in the Midwest, or at least what I would say the middle latitudes of our country, places like Tennessee, Kentucky. I like these places because they don't get built up and bought up like the Sun Belt. And really, you got to survive to thrive. So that's part of my philosophy. So yeah, I definitely want to look at every market. I mean, Freddie Mac is a great way to do that. They track about 25 major metros. And if your metro is not among those for the multifamily price tracking, then definitely just look at the single family. I mean, that'll keep you out of places like Vegas.
Yeah. Yeah. Right. Right. Hey, so I know you authored a book called Passive Living Through Passive Investing.
So passionate living through passive investing.
Ah,
Yes.
awesome. And why don't you talk about that, and what was the thought process behind it when you wrote it? And
Yeah. So I've always loved teaching. So I taught when I was in graduate school. I love having a meetup. I have a call every week. I just love people, and having the opportunity to mentor is just huge for me. So when I looked at my life and my experience, I wanted to do something that would stand out, and not just write a book about multifamily, although that's coming. I wanted to write more broadly because I've invested in everything, including early stage companies as an angel investor, Shark Tank stuff, and private equity, not just in real estate, etc. So I thought, this would be a great opportunity to introduce people to the entire world of private markets and private debt. That's another one. It's a beautiful place to be. The lender always gets paid first. I think a lot of us equity investors have taken that as a bit more of a shock than it should be in the last few years. So all these things that you can do, from private lending to private equity, and I really wanted to introduce people to that, and not just say, hey, come invest with me, although that's important, and I certainly welcome you if you do. So the first thing I do is I teach people to look where other people are not looking. I mean, how do you beat the pack if you're running with the pack? So definitely look into private markets. Don't just look at equity, look at debt. And then I talk a lot about mindset. Take immediate action. I mean, anything that you don't start today, if you learn something from this podcast today, but you don't put it into action today or this week, what is the likelihood that you ever will?
yeah,
So take immediate action, and you want to be enthusiastic about it too, because it's so easy to get clobbered by whatever happens today. I mean, I can't even tell you how many fires I've put out, and it's hardly afternoon. So you want to take immediate and enthusiastic action so that whatever you do, if you decide today, yes, I'm going to become a multifamily investor, just make sure that you attack it like a tiger so that it doesn't get lost in the shuffle. But also I talk about what it's like to just live a passionate existence. So you don't have to be super wealthy. I mean, I have a lot of fun on my $5,000 sailboat. You don't have to have a yacht to get out on the water. So just get out there, have fun, make sure you can afford your lifestyle. Don't let that lifestyle creep, because you want to be free as soon as possible. And Mike, I want to tell you that I'm essentially free right now. I mean, I do have responsibilities because I have apartments I own actively. There are things I need to do every day, but I feel that, if I decided I don't want to do another deal, I can do that. And that's a great feeling. So don't let that lifestyle creep. Enjoy fun, great things, particularly things by your house. I mean, I marvel at the fact that people travel. People travel to Southeast Michigan. We have the Great Lakes and everything, but this is where I work. And if I don't remind myself that somebody's in a hotel tonight just so they can enjoy this area, then I'm not fully appreciating it. Live your life like you're on vacation, and you don't have to spend a fortune to do it. So it's a lot about mindset.
I love that. Live your life like you're on vacation. Yeah, I remember listening to Zig Ziglar years ago, and he said that the busiest day in people's lives are the day before they go on vacation.
Yeah.
If we could just all work like that every day.
It is true. Yes. Focus, focus. That's another thing is I tell myself I like to not wait until the evenings to have fun. So, I work out throughout the day, maybe play my guitar, practice dance, etc. And this reminds me that if you just wait until the evening to have fun, maybe you don't. And it's easy to get stuck on the wrong task and let the time expand uh, to the time allocated, and just don't let that happen. Remind myself that, hey, if I jump on my work like a tiger, I will have time to do this. And if I have to remind myself what it's like to have that free time, then I will take that break, go down in the basement, play the guitar, dance, do whatever I have to do.
Yeah. Awesome. Good for you. George, what are you working on right now?
Yeah, so the main thing is I'm working on my next book. I don't have a working title, but really two things. I want to introduce newer investors to multifamily, and I also want to talk about the war stories, or maybe you should call them horror stories, that go on in multifamily investing. I mean, all kinds of crazy things. And I get exposed to so many deals, and I thought, it would be a real shame if from all the deals that I invested in, either actively or passively, or all the people I've mentored, that if I don't put all that into a book and help people understand just how not to lose money, right? If you buy a book and it saves you from one bad deal, or it gives you one idea about how to pull yourself out of the muck when things are difficult, then I call that a good purchase. So I just want to put that all together because they just write a book, it seems, that is advertising. It's all cheerleading, it's all mindset, and they tell you can make a lot of money and just do it just like I have. And I don't think that's the way. We really need to hear. They say success is a poor teacher, right? People need to hear about the difficult stuff, and it doesn't make you look bad when you talk about the tough times you've been through in your life. It makes you look real. So I think that it's going to be actually a two-book project, and really more excited about the second one because, again, if I could just tell you one funny story that I was reminded of by someone who was in a similar situation. I negotiated a great PSA with great seller financing, and then I got back the docs, the mortgage and the note, and there was no resemblance to what we negotiated. Like literally nothing. It was literally the most recourse note that they could have written. And I had to go fight it line by line. And I was fighting it literally even as I was driving to sign the documents. I got the call from my lawyer. Yes, they agreed to the last change. And that happens to people, right? The bank dumps documents on you, 3 days before you're supposed to sign them. And what if you're on vacation, right?
Right.
So these crazy things happen, and it's really just a part of life. So if I can save one investor or I should say, if I can save every investor who reads that book from just one difficult situation. But there you go. And there's a solution to every problem too. So I signed some very non-recourse note as we agreed
Yeah.
at the end. Big fight.
Yeah, there's always great stories, right? I mean, the more we keep doing this, we have stories, we have success, we have, stumbles along the way, and
Yeah.
we have laughs along the way also. And I think,
Exactly. We can laugh about it. Sure, those are the days that make us stronger.
yeah, yeah. Listen, I always say, if you can't laugh about it, what's the option, So, George, how do people get a hold of you?
Yeah, sure. The best way to do that, you can come to my website, www.robertscapitalenterprises.com. And you can find the first chapter for my upcoming book over there. I always like to have something free for people to look at, a way they can get to know me. So come out to my website, please.
It's awesome. Yeah, I would encourage people to grab a hold of your book just by the title. And I know that there's some great insides inside of it. Just by the title, though, that's intriguing enough to, why would you not want to live a passionate life, right? And
I love it.
yeah. Hey, listen, thanks for being here. I appreciate you. I appreciate your insights. The conversation's been great. You've got my curiosity up a little bit more this morning. I have some things that I need to do some research on and, continue to move forward. So, George, thanks for being here. I'm going to go ahead and move you out and say goodbye to my audience. And
all right, appreciate the opportunity to speak to your audience. It's been a great conversation, Mike.
You have a great day, George. Thanks.
Yep, thanks. Take care. Bye-bye.
Hey, everybody. That was a great show this morning. I love what George said. Yeah, his one word was enthusiasm, and there's no doubt he's enthusiastic. But, better than that, the word curiosity. I think we always need to stay curious. I'm curious today why, back in 2022, when like George and I were talking about, there were so many people in the multifamily space. The wind was at your back. Everybody was a genius. And those people are gone today. Nobody's around anymore. And only the strong will survive typically. I hate that saying, but it's so true because, if you've weathered this storm the last 4 years and you're in 2026, boy, this is a time to take advantage. Whether you're an active investor, whether you're a passive investor, this market's going to change and shift, and we are in for a long run. I believe that this side of the market cycle going up this time is going to be a long run. And, I've said for 3 decades, boy, if I could just get in the market just before the market changes, not when the media says the market changes, because if you wait for the media, you're missed 18 to 24 months of the market change. But if I could just get in at the beginning, and that's right where we're at today. So, hey, look, if you're a new investor, you're looking to get involved in multifamily, give me a call. Love to have a conversation with you, see how I could help you, maybe just give you some guidance and direction, whether it's actively or whether it's passively. So, hey, everybody, have a great weekend. Look forward to seeing you next week. We'll be back next Saturday with another great guest. Multifamily Unplugged, and have a wonderful week, everyone.